Welcome to the XY Advisor Podcast, a global community of financial advisors sharing and learning with one another to drive the positive evolution of financial advice. To get involved, go to xyadvisor.com or simply download the XY Advisor app.
Innova Asset Management is a boutique portfolio manager that has been managing client portfolios since 2010. Innova believe in constructing portfolios that work with investor behaviour rather than against it. This is why they have built risk-focused portfolio solutions that support a goals-based advice framework. Innova's focus on risk management and their active approach to asset allocation has been designed to work through all market cycles, which was evident in 2020 when they were able to participate in the market rebound while also protecting capital on the downside.
Hello and welcome to this topic series on behavioural investing, where we take a deep dive into the client and advisor decision-making process. My name is Fraser Jack, and in this episode number 3 of 5, we tackle values-based decision-making. From understanding what motivates your client's actions and behaviours to finding investments that reflect your client's goals as well as their values, allowing clients to take ownership in the decisions that you make together. If you are having these types of conversations with your client or thinking about it, then you'll get a lot out of this episode. Thank you, everybody, for joining us again. We are in the midst of talking about values-based decision-making. We're halfway through our 5-part series, and we're starting to get a little bit deeper into the way that human beings work. We've covered off on some of the biases. We've talked about how goals are such an important part of that process. I'm joined by Patricia and Katherine. Thank you very much for both for being here. Katherine, I'm going to throw to you on this one to start with. We're going to talk about how values control people's behaviours and the decisions that they make. Do you want to kick us off with what your thoughts are?
Values control all of our decisions that are both conscious and unconscious. So we move towards our values always. And if we aren't moving towards our values as individuals, we know, because that's when we won't be feeling good. So there'll be some kind of, they call it these days mental health issues. But it's basically where you're not feeling good, and the reason is because you're probably not living your life in accordance with your values. And so I see the values discussion is really core because of that, because it's so important to each of us. But I see it in the advice relationship as even more important, because there's that famous line that clients want to, or not all, of course, but most clients want to pass on their values. They don't want to pass on their valuables. So when we start to think about clients in terms of big family units that probably carry similar values within those family units, and start thinking about them as a group of people, and we're the facilitator of how to actually ensure that there's an intergenerational carrying on of the good quality values that got their family to the point where they are today. That's such an empowering discussion, I think, for clients. And it's the kind of discussion that's going to make them kind of bounce out of our offices, not just slump out, because they'll be so empowered to be thinking about the next generations and the kind of family empire that they're building in a way. So I kind of see it with those two components.
Yeah, that's super interesting. When you talked about the idea of not quite knowing, you have that feeling where something's not quite right, or it's just incongruent with your values. But then I also find it's often very difficult for people to be able to articulate what their values are, because they haven't necessarily done that work. Patricia, when you have clients come into the office and you're talking to them about these decisions, and you're looking for these triggers and values that are going to dictate what their goals might be, do you work with your clients in any way to try and find these out, or how do you go about understanding what a client's values are?
Yeah, no, it's a great question. And to be perfectly honest, it's something that I want to improve in our business. And I think it's something that the majority of businesses still need to work on. There's a lot of the why, why is this important? Why this is important to you? That helps. But I still think that we lack tools to really drill down into what our values are, what our clients' values are, and also explain to them why we're even doing it. For some clients and even advisors, it can be an uncomfortable conversation because, someone comes into you, they don't even know you, they exposing the entire financial situation and mistakes that they potentially embarrassed about and a lot of things to a complete stranger. And then you want to ask them about why things are important and why values I find that quite difficult to tackle early on. And even with the tools that I've tried to use in the past that, have been proven to work. I think that, that probably the solution is a combination of both. It's, starting slow and then slowly building the trust and slowly learning more. The way I've done it, given I don't have the perfect solution, is the getting to know my clients. So the more you get to know them, the more you start understanding their values just by the way that they talk to you without even having to ask specific questions. But it's definitely something that I think we should improve on. And financial planning is a lot about being a little bit of a psychologist and counselor in a way, which is not our area of expertise. We didn't go to university to learn that. But, we need to improve our people's skills and drill down on those things to help with behavioural decisions. And I think that, that is extremely important and potentially an area that needs to be explained to clients and advisors better from when they first come on board and also when advisors go to university. Like I said, the way I do it is by asking some questions early on and then learning more about them, and then it's not like a full on what's your values, what's important to you and drilling down. It's little by little and you building that. And then as you build more trust, you actually find that they'll tell you things that they didn't tell you at the beginning anyway, even if you put a question in front of them. That's why, I am a strong believer that robo-advice has a place to reduce fees and help people that can't afford advice and address certain things, but it will never address this because not even humans with PhDs are amazing at addressing it.
Yeah, this is a really interesting point, Patricia, that, and I'll ask you about it, Katherine, because that concept around building trust and just going back, Patricia, to your, passing on values, not valuables, that could be a great way to introduce the conversation with your clients. We're here to deal with your valuables as well as, your values. That trust thing, obviously going in deep into somebody and doing some work with somebody on their values, you kind of really do need to have that deep level of trust. Katherine, what are your thoughts?
It's very true. And there are some people who are experts in exactly that, building that trust in a very short amount of time in the initial meeting. And like you said, Patricia, they're probably from a field that's not the business school. They're probably from one of the other sectors. But I remember when I started being a financial advisor, 2007, kind of a similar time frame to you, I think, started the GFC. And the conferences that I was going to with the AFA in particular had these, what I call the old lifeies. And they had this incredible way of, like a sequence of talking to clients to elicit their values, and then to, because they were kind of the old school style of then, of course, kind of providing a solution as well, some kind of solution that actually aligns with their values within one discussion, which inspired me so much to think about this is actually, this is possible. It can be done. It's not something that we are taught at university. It's not something that is really detailed in our codes of ethics or in the regulation, but it's something that can be used to really develop those client relationships at such a deep level. And once we have actually built the trust, so we can build trust in lots of different ways. We can either build trust quite quickly using some of these very specific psychological techniques that, for example, psychologists have to use, or else they're going to have the first 5 meetings are going to be completely useless. Or, of course, it can be just time. So it can just be a client that's been with us for 10 years is going to be trusting us, as simple as that. Once we have that trust, regardless of how quickly we get it, and we can engage in that level of discussion about the values, the power of our relationship with that client is going to be so much deeper, so much more connected to who they are really at their core. So the goals-based approach is such a fantastic approach because it's so easy to help clients to understand that they are moving towards their goals, they're going to achieve their goals, and we're helping them on that journey, and it's so empowering. But that's almost superficial in some way to who we are as people, which is very much our values, and very much almost everyone. If you give them the list of possible values, one of them is family in the list, and almost everyone says, my number one value is family. And then so the next discussion is, of course, fantastic. Tell me about how much time you're spending with your family. Oh, yeah. Well, I see my parents once every 2 months. They do live a couple of hours away. Ah, right. Okay, great. So let's have a discussion around that and help you to be living your life according to your values. So I see it as something that can be so empowering, especially when there's that intergenerational discussion. Like, imagine if we had a KPI that was how many intergenerational clients do you have as an advisor? It'd just be a KPI on how well do you do values-based advice, I suppose, because that's what it is. If you're doing that, then, well as other ways, they're bringing in everyone else.
Yep. Now, Katherine, you've got some really good points there. One is obviously knowing your client, and I think that values is a great part of that. And you also mentioned the idea around, everybody, it's when it comes to values, you can see a list and go, yeah, that's definitely what my values are. But I think this is one of those areas where past performance is an indication of future performance when it comes to values, because people often have, like you said, the behavior, this is my value. Great. Show me your diary. Show me how that actually works out for you, because if it was a true value, you'd probably put more prioritization around it. So what are your thoughts around this concept of, understanding your past decision-making, especially if you're talking about values-based decision-making? What are the past decision-making traits that you've made decisions on that might be an indication of what your values are?
In psychology, we use behavior as such a fantastic indicator. And we use it in financial advice as well. So one of the questions, of course, is tell me about what your values are, your family, or your perspective on risk. And then the other question is, fantastic. So you say you're a conservative investor and you really don't want to take any risk. Great. Tell us about some of the investments you've made. Oh, I own 3 rental properties in the suburb of Nerang on the Gold Coast. Right. Okay. So, and they've all got mortgages. Yep. Okay. Excellent. So obviously what you say and what you do are completely different in that instance. And in the financial space, that's kind of an interesting, easy discussion to have about that contradiction. In the personal space, though, it's really difficult because the person, which is most of us, who would rate our family values as one of our highest values, yet we don't invest that much time with our family, with our parents, with our extended family. That is one of the main sources of that sense of unease potentially that the person has, or however that manifests in their life, the not being 100% happy. So if we can identify what that is, and that discussion is a very complicated discussion because they're not expecting to have that discussion about living their life according to their values and how we can play a role in that. What is it that's stopping them from seeing their parents more, and can we support that as a goal that we can work towards achieving? That's a hard discussion. I don't know how that would play out in the coalface. Do you have experience with that, Patricia?
Yeah, it's really interesting how you can see that play out in your meetings. With our business, we do intergenerational advice. Like, we've got grandparents, parents, children, grandchildren, and it's really amazing to even see the way that they comment about each other and, the family interactions and all of that. But one of the things that one of our philosophies is that we believe that money is only as good as the memories it buys us. And that's a way that so we remind them of that philosophy, and we remind them of their goals and making sure that they're being aligned. And are you sure you want to keep working longer? Are you sure you want to not spend as much time with your family? So that comes into play about getting the balance right. And what I say to people, to my clients, is that everyone's balance is different, though. And, there isn't a one size fits all balance. The balance doesn't actually mean that you actually have to work less. For some people, that could be working less. For others, it's not. So they need to decide what the right balance is for them, and they need to decide what the right memories that they want to buy are. And essentially, our job is just to remind them of that so they're not in just the, hamster wheel, that they're living their lives along the way, and that, they're going to essentially look back and be proud of what they've achieved. And, no one's perfect. All of us do that. I don't live by that myself all the time, but I keep reminding myself of that. And I think it's important to keep doing that with clients and figuring out their own values. And you do that by the goals that they have, by the things that they told you that they're afraid of or excited about. And that's, what can essentially be a trigger for them to change the path that they're going on.
Patricia, I really love that saying, money is only as good as the memories that advise you. I think it's a fantastic realization that this is all about, it's a human business that everybody's in, and the money forms part of that. And by bringing that money and that investment or that conversation or those goals back to life, back to an emotion or a feeling, and, money's there to buy you magical moments. I think it's a great way then of cementing that in the client's mind and in their values to understand and be able to, tell their friends about that at a barbecue. We might leave this particular subject here. We could talk about it for hours. I just wanted to float. Well, we'll chat to the two of you again when we start talking about risk profiling in the next episode. Look forward to it. As we continue our conversation into values-based decision-making, I'm joined again by Dan and David. Thank you for joining me, gentlemen. I'm going to start with you this time, David. Tell us about your thoughts and ideas around values-based decision-making. Obviously, we covered a lot of things in the previous episodes around bias and risk, but tell us about your overview.
Yeah, so probably start in institutional world. So what's happening in big super funds and what's happening in big pension funds around the world and what's happening in global investment management around the world. And there, the push is strongly into accounting for ESG and thinking more and more about sustainability. And the push there is significant. The trends are there. They're only going to get stronger. And I sort of see a lot of that. I'm sort of on the edge of observing that in a pretty constant way. But then I sort of think about, wow, huge challenges again for the advice community, because there's some key differences here. One is that when you're a super fund or a pension fund or an institutional investor, you're actually overlaying your own values and you're integrating them into the way that you manage a portfolio, and a member or an investor can choose to participate into that portfolio. So sort of one definition of values and move from there. Whereas with advice world, I'm just going, wow, this is what a challenge, because it's based on individual conversations, tailored financial plans. And so one of the key things I'm interested in exploring today is, well, do you have personalised definitions of value? And if so, wow, how will this work?
Yeah, I definitely want to get into that conversation. But before that, we'll do that. I'll throw to you, Dan, as well. What are your thoughts on this topic?
Yeah, I find it extremely interesting. I've had conversations with people quite frequently about ethics and values, and we can start off simply with things such as ESG. I had a conversation with somebody recently who looked at what one ESG metric score showed somebody as being extremely high and another one extremely low. And they're like, how can that possibly be? I said, well, ethics mean different things to different people. Different people have different values. If you speak to you might speak to a priest or somebody who's highly religious, and the idea of investing in a company that produces condoms might be very unethical. And yet, if you talk to a missionary in Africa, they think they're one of the most amazing things for preventing disease in the world. They're two completely different values on the exact same topic. But values is not just around ethics. It's also about things like fees and quality and what do you personally value? Like, what is it that you want to? What is it that you value out of the world? A lot of people, it might be money. A lot of people, money might be have just be a means to an end to achieve certain things. And I think there's an enormous challenge in that we as an industry have not provided advisors with anything like the level of tools that they need to be able to have conversations with clients to flesh out what those values are to them, so that not only what are they and how important they are, but potentially, how you would rank them, and how you would prioritize them. I think that's a huge challenge, and a very interesting one that I'm sure we will overcome, but it's not going to be tomorrow.
If I just add a little bit of data to what you were saying then, Dan, just to go back to that ESG piece, and it just highlights the dispersion amongst interpretation, before we even get to values, just on ESG. There was a piece of research that took the three largest ESG sort of ratings providers and looked at their ratings across different companies, and the correlation between those ratings was only 0.4. And if you do that in credit world, where you take the major credit houses and their credit ratings of different companies, the correlation between those ratings is 0.9. So something objective like credit risk becomes really consistently applied by different parts of the industry. But then when you get to ESG, a lot more qualitative, a lot more interpretation involved. Yeah, you get little consistency, and then you go that step further and you actually get into values. You can just see it would break down further again. So what a difficult situation.
It is very difficult for managers, and obviously that's probably why they have more of a scale of deep green to light green to are we influencing or are we excluding? So we can go there. But Dan, just to your point, there was a lot of advisors doing or getting involved with this now, understanding or wanting to understand the client's values and maybe even talking about their own business having values in their own businesses and trying to attract clients that have similar values to their business, therefore making it easier. But yeah, you're right. Right, it has been a difficult one, and obviously we've had a know your client part of the Corps Act for many years. But that was taken, I guess, early on to knowing the metrics of your client, not necessarily knowing the values of your client.
Yeah, no, absolutely. And how does one understand the values of their client? There are tools that are coming out, where people can complete things such as impact assessments, and questionnaires that advisors off their own bat, because they haven't been given the tools themselves to be able to have a values-based questionnaire to try to flesh out from their clients what it is that they value. And I think there's a challenge that should be put back on the product providers, is to provide a plethora of solutions, because this concept of one size fits all is clearly nonsense. There needs to be variability in the availability of product to be able to provide for the fact that, everybody is different. Each situation is going to be different. Yeah, there might be a lot of overlap and correlation in certain pockets of people that fit certain demographics or fit certain regional areas or whatever the case may be, but there is still that level of variability in terms of being able to provide a product that helps to achieve those values. And so we need to, as an industry, provide better solutions, one, to allow advisors to flesh out what it is that is really, really important to the client. Two, prioritize it so that, because, you may need to give up something to get something. And three, have viable solutions that you can put together and provide to them that may not be the exact solution, but is at least a best fit, as opposed to a one size fits all approach, which I believe has largely come from the institutional space, where David, as you mentioned, the correlation across those three institutional spaces on ESG. I mean, we just look at the view on uranium. I mean, uranium was a negative screen on every ESG filter in the world 10 years ago, and yet now the demand for uranium, because of the push to ESG, has completely flipped. But that's at a large institutional level. At an individual client level, it's so much more personalized, and that's where I think we've kind of failed as an industry, and we need to help advisors with those values-based questionnaires and provide them with varied solutions so that they can provide results and answers that fit different types of people with different values.
It's tricky, Dan. I agree with what you're saying. Just wondering, I mean, I'm not an expert, far from an expert on financial advice sector, but and maybe Fraser can fill in a bit here, but I always advocate that advisors should know more about the financial literacy skills of their clients, and And I think it's a great idea to find more about their values. But if these values are so nuanced, like the example on uranium you were giving was fascinating, and the same with coal export. Yeah, of course, the alternative is exporting from Indonesia, which is dirtier coal, and things like that. Each of these little issues is really nuanced, and yeah, it's probably unrealistic to get a client across each of these issues. There's a whole plethora of them. So how do we sort of get into a containable sort of conversation that an advisor can have with their clients is really the challenge I can see, and I don't have any great insight into it or guidance on it.
Yeah, my thoughts on that are a lot around the idea of understanding a client's values, understands their drivers, and then once you've understood your drivers, then there'll obviously be more information and more things to talk about, but it often comes back down to the thing that they'll remember or understand or want to make a decision on, understanding around whether it is a deep green or something like that, and then going, okay, great, well, that's X amount of cars. My investment portfolio has removed X amount of cars or equivalent to off the road. Being able to hang their head on something that's quite simple like that is really interesting, because sometimes the amount of information can be just overwhelming.
Yeah.
Yeah, no, you're right. I think we need to strike a balance because it is an incredibly complex and area with very, very diverse levels of nuances, as you've said, David. And so you want to generalize it to an extent, but not generalize it so much that, it's a one size fits all that doesn't actually end up achieving what anybody was actually after. And I think we're getting there, and I think that's that concept of different people having different providers having different philosophies and abiding by them and standing by them and saying, this is what we do, because if it fits with you, great, but if it doesn't fit with you, there's something else out there. But as you said, David, it also comes down to financial literacy, because clients can have very strong values or very strong views around certain things. I mean, we're largely talking about ESG here, but we can expand on it. But do they necessarily have the financial understanding or capacity to be able to make an educated decision, because their values is something that they hold very personal. It's very personalized and it's very psychological. And so, can that be translated into a more logical framework? I think there's probably ways that it can be done, but it certainly is something that needs to be thought of. And I think the advisors that do think about it, and they don't have to have the perfect solution, but if they've got some form of solution, they're already miles ahead of their competition.
Yeah, I think values are definitely part of that. We talked about earlier that bias around decision making. They're definitely part of a goal setting process, but they're originator and the motivator for goals. David, I want to talk to you about bridging that gap between that emotional framework as well as the logical framework when it comes to values. What are your thoughts?
I think there's probably a couple of framing words that help, and that is value-based investment versus values-based investment. Value-based investment is when you look at issues like ESG, particularly as risk factors, and sustainability is probably more a thematic piece. And so I think it's the responsibility of any investment manager, any financial advisor, to consider the risks to outcomes of any investment. So I can't see how you can ignore value-based investing anymore. You're not really doing your job if you're not accounting for risks which may impact outcome. Values-based investing is different, and this is where it gets difficult. And so what we're seeing emerging in the institutional world is a reasonably nice sort of framework of how it can be applied. So you've got areas like impact investing, where you're making dedicated investment decisions which are going to have societal impact. Opportunistic investing, where you might be looking to participate in new technologies to participate in the investment opportunity. So think of your batteries, all those sort of solar, everything like that. Then you've got exclusions, and this is something that can be implemented. So in the super fund industry, there's generally tobacco is excluded and nuclear weapons are excluded from mandates and so forth. And then finally, engagement strategies, which is what investors do when they're engaging with companies, how they direct their proxy voting and so forth. So they're sort of the four main themes. And I look at them at institutional world and think, well, what could be applied by advisors themselves? And it's probably, it could be dedicated impact investing there. It could be opportunistic investing, even through manager identification. Exclusions, I guess that could only come through in a managed account type environment. And then it's the engagement piece, which probably difficult for advisors to get too involved in. I'd be guessing would be my view on that.
Yep. I'm thinking that we're sort of approaching the design and distribution type conversations now, Dan. Is that where we're heading with this?
Yeah. Happy to.
Tell us about how this values-based investing then can benefit advisors with their design and distribution conversations.
I think that being able to sit down with the client and have conversations in regards to something such as an impact assessment that allows them to determine what it is that they find valuable, that they find close to their heart, whether it's their ethical and socially responsible considerations, or their things such as whether it's fees or it's just raw return results, what it is that's important to them. There are solutions out there, and there are ways that people can go about doing things. I'm actually a firm believer that the research is reasonably clear that impact investing and even light green through to dark green investing and having an influence on CEOs and company management doesn't necessarily have as great an impact as direct charitable investment. So, David, one of the things that you mentioned earlier was, if I recall, it was the first of the 4 points was impact investing, I believe it was. But how can you translate those 4 into the advice realm? And charitable giving is one that's quite interesting. And I can see products where the profits from the offerings that are being made, they can be profit for purpose. They can be allocated to the charities that are aligned with the philosophy of what the product actually is, assuming that that's, as a consumer, that you believe in those values and you believe that those are correct. And I can tell you that there will be things like that before the end of this year, which I'm quite excited about.
Yeah, that's really interesting because it's not just about making returns, it's about making a difference.
Yeah.
Gentlemen, thank you so much for being on this particular episode. We're going to probably wrap that up there, but we look forward to jumping in and catching you in the next episode when we start talking about risk profiling.
Thanks, Fraser.
Great, thank you.